The Atlanta Fed GDP tracker now shows that the U.S. economy is likely in a recession. We will not know this officially until July 28th when we get the advanced estimates for Q2 GDP data, but the Fed tracker is estimating GDP to come in at a negative 1% print. That would mean we are in a technical recession. On another note, Sam Bankman-Fried, he is the founder of FTX and one of the youngest billionaires that has ever lived, says that some crypto companies may be too far gone. We have some wild crypto news to get into and some news in financial markets here today. So we're going to get into it. Not going to waste any of your guys' time. Hit the like button and subscribe to the channel. It does greatly help to push these videos out to as many people as possible. So hopefully we can help other people make money as well. And yes, I do realize I butchered Sam Bankman-Fried. That is his real name, not what I just said. But let's get straight into the info. We did get data from Europe on their inflation, and for the month of June, the Eurozone seen a record high for 2022 of their inflation rate at 8.9%. This is up from 8.1% in May, so this is obviously not a good thing. It could be a precursor of what to expect coming in America, coming the next CPI report, which is going to be around July 11th. It's usually around the 11th to the 12th of every month, so we'll have to double check on that once that date does get closer, but that is going to be another big event for the markets. On the crypto front, Tether has continued to reduce its commercial paper holdings, trimming holdings to 8.4 billion from 20.1 billion in 2 months per CoinDesk, and this is going to add to a lot of those fears in the crypto markets. Are stable coins really backed by something tangible? Is it just boats or cars that is held on their balance sheet, for an extreme example? Or is it treasury bonds? Is it straight up cash? Is it gold or silver? These are things that we simply don't know about when it comes to stable coins, and then at the same time we don't understand how much risk is currently associated in the crypto markets. We don't know if we are one domino away from crypto collapsing or potentially one good catalyst away from new all-time highs. This is going to come down to leverage in the crypto markets and really nothing else. Now, due to the fact that exchanges like BlockFi are going bankrupt and Sam Bankman-Fried and FTX are buying BlockFi for $25 million, 99% of a discount from its last venture capital offering of about $8 billion, it really begs the question of, is crypto doomed? Or how long is crypto going to take to start getting back on its own 2 feet? Because this is very worrisome. This article says crypto billionaire Sam Bankman-Fried says more exchanges will fail. Quote, there are companies that are basically too far gone. If we look into this article, he says there are some third-tier exchanges that are already secretly insolvent, Bankman-Fried told Forbes. The 30-year-old's own fortune has taken a significant cut this year as crypto has crashed, but still sits at $8.1 billion, according to Bloomberg. Bitcoin, the largest cryptocurrency by market value, lost 58% of its value in the second quarter of the year, putting it on pace for its worst quarterly performance since 2011. It fell below 19,000 on Thursday, a long way from its all-time high of nearly $69,000. Bitcoin led the slide of the overall cryptocurrency market, whose market valuation now sits below $1 trillion, down from its November 2021 peak of more than $3 trillion. So there has been a lot of wealth destruction in total due to the crypto market. Bankman-Fried's FTX has been seen as a lender of last resort in the crypto space, meaning that it is given loans to exchanges near collapse, and on Thursday, CNBC reported that it is close to a deal to buy crypto lender BlockFi for roughly $25 million. Still, Bankman-Fried said there are more crypto firms that will likely go under. Quote, these companies that are basically too far gone, and it's not practical to backstep them for reasons like a substantial hole in the balance sheet, regulatory issues, or that there is not much of a business left to be saved, he said on Tuesday, without naming any specific companies. So I think this is really a glimpse into the crypto market. and really the exchange market in particular. But you could also boil this down to hedge funds. Anyone involved in crypto and their main segment of their hedge fund or their business, aka these exchanges, are not in a good place unless you've seen this coming and you prepared for this a long time ago. And it does not look like many hedge funds or exchanges prepared for this when they probably should have. So there's probably more pain still to come in the crypto markets. We can see the mining rates are down across the board. There is a lack of interest in crypto from a lot of different people. I do think this is a long-term buying opportunity, but I do think you need to be prepared to take more blows here in over the next couple of years. This could be a crypto winter, as been quoted by JP Morgan and a lot of other lead analysts on Wall Street. It's likely to take a little bit of time, but I do think you are in for higher highs sometime down the line. Then you have Mark Cuban saying in quotes, "Crypto is going through the lull that the early internet went through," Cuban said. "The space is currently stuck in an imitation phase where there are too many companies with too little new utility. Like Bankman-Fried, he predicted that more companies will fail. The chains that copy what everyone else has will fail," Cuban tweeted. So I think it's pretty clear. Like I just said, you're in for more bad news, you're in for more bankruptcies, and ultimately, if you're bullish on crypto, this is a buying opportunity that you will probably not get ever throughout the rest of history. Once we actually make a recovery, and a solid one at that, we're not coming back down to these levels, in my personal opinion. So take that information and do what you guys want to do with it. Let's move on to the broad markets and what the Atlanta Fed GDP tracker is showing. And it's showing that the U.S. economy is likely already in a recession, predicting that we will see a negative 1% print for Q2 advanced estimates for GDP. That comes out July 28th. And we're going to go ahead and read these couple paragraphs right here, and then talk about this situation a little bit more in depth, and then what we can expect for the rest of, essentially, probably the rest of the year. Now, it says, however, the Atlanta Fed GDP Now measure, which tracks economic data in real time and adjusts continuously, sees second quarter output contracting by 1%. Coupled with the first quarter's decline of 1.6%, that would fit the technical definition of a recession. Quote, GDP Now has a strong track record, and the closer we get to July 28th's release for the initial Q2 GDP estimate, the more accurate it becomes, wrote Nicholas Collis, co-founder of DataTrek Research. The tracker took a fairly precipitous fall from its last estimate of 0.3% growth on June 27th. Data this week showing further weakness in consumer spending and inflation-adjusted domestic investment prompted the cut that put the April through June period into negative territory. One big change in the quarter has been rising interest rates. In an effort to curb surging inflation, the Fed has jacked up its benchmark borrowing rate by 1.5 percentage points since March, with more increases likely to come through the remainder of the year and perhaps into 2023. Chair Jerome Powell earlier this week said getting inflation down is the paramount job now. And that's the thing. The Fed will take a hit to GDP and will put us into a recession to get inflation down. And that is somewhat bullish given how far down the markets have already sold off. The NASDAQ down over 30%, or almost 30% at the time of recording this video. The NASDAQ down well over 22% for the first half of 2022, marking the worst first half of a year for equity markets in 50 years. You have to go back to 1970 to get a first half of the year that is down more than where we are down right now. So when we go into recession, when we are confirmed in a recession, July 28th, investors are going to go ahead and start buying the bonds up, and that is going to push down bond yields. And that is what you could see happening right now. The more fearful the investor gets about a recession, the more we expect deflation, and the less that we are concerned about inflation. And that drives down the 10-year bond yields, and that pushes down interest rates for everything, for credit lines, for mortgages, basically everything. So that is a little bit of a bullish thing. Now, have we priced in enough pain? That is the question that I simply cannot answer. But what I do know is we have the Fed raising rates July 27th. We have the advanced estimates for Q2 GDP coming out July 28th. And then we also have earnings at the largest companies, Apple, Amazon, Google, Nvidia, Tesla, all of these large players from pretty much July 20th until the beginning of August. So if there is a time to see that flush out to the downside, it is likely coming here and coming very quickly. You are also getting this news that just came out 18 minutes ago. FTX US to give $400 million credit line to BlockFi. BlockFi signs agreement with FTX US and deal valued up to $680 million. So it does look like they're giving this line of credit to go ahead and try to buy out FTX. So there is that, and you can see this one right here. It says it's official. FTX has a deal with BlockFi. $240 million is high end of price range, as we reported earlier. All of the deals include earnouts. No word on the low end, which may well be that $25 million price. No matter what, a huge loss for the investors. And it says right here, it's official. The deal has been signed. So, it's bad in terms of, what is actually happening in the crypto markets, but it could mean a little bit more stability if something like FTX can come in and actually save the day. On another note, why the bond yields are likely falling so much today and why you're actually starting to see a bullish reaction in the stock market could be in part with some of the automaker data that we are getting. Every single automaker besides Porsche has reported that U.S. sales are dropping in between 10 and 30% year over year for the same month of June. So June 2021 was a much better month, much better year for automakers, and that is showing the demand destruction. It is so expensive to get an auto loan. It's not happening. People are not going out and buying new vehicles, and that is going to help push us into a recession even faster. As you guys can see right here, Toyota US sales dropped 17.9% in June. And then you do have right here, Honda, their sales are down 53.6% year over year. That's a massive decline. Fiat Chrysler, second quarter US total sales declined 16%. And you've been getting this data all day. It's been bad all day. So you're definitely seeing the recession fears taking over, pushing down bond yields, which is helping to push up stocks here today, at least in the short term. The real test to what is going to happen will come when the Fed raises rates July 27th. The GDP data comes out July 28th, and then the rest of the earnings that will fall on different dates within that time frame. Now let's switch gears and talk about AMC stock. AMC is pretty flat on the day. As you guys can see, it's 0.00% change. It's bobbing up and down between negative, positive. As I just said, the stock market has pretty much been rallying since we did hit that bottom at 373.81, now sitting at 379.32. So it's been a pretty decent move to the upside. AMC is now slightly positive, maybe different by the time you guys see this video, but as we talked about in the last video as well, I do have this descending level of resistance and ascending level of support. We are coming to this level where you do expect and will expect to see a bigger move than not. The fact that we are holding above the 50-day moving average, came down, tested that level at $13.27 per share in the beginning of the trading day today and found support at that level is definitely a good sign. And you guys can see the actual low of the day was $13.26 per share. The algorithms must have kicked in and started buying stocks once we hit that 50-day moving average. So that is a clear sign that AMC stock is likely about to go crazy, in my personal opinion. This is textbook, and this is exactly what you want to see. We actually broke out above the descending level of resistance, and then we did did get rejected, came back down, but found support, like I said, at the 50-day moving average. So I do think AMC stock is likely going to go crazy here in the next upcoming weeks, and I think that is something to be very, very excited about. Now, the RSI sitting at 53.11, so slightly above that neutral level of 50, but still, you're not bullish, you're not too bearish, you're pretty neutral overall. Now, the actual stock and the actual chart has been going up, and you are definitely on a bullish trajectory, so keep that in mind. Now, the MACD is still very, very bullish, even though we're not really doing all too much. We have been bullish on the MACD ever since this is May 24th, so we have been bullish for quite a while, even though the markets did hit fresh new lows on the S&P 500 back here in mid-June. AMC has not been playing along and has been doing its own thing, staying on that bullish side. Now, let's go over the Ortex data, because there's something that might alarm some people, and that is the short interest looks like it is coming down. The short interest of free float is sitting at 18.8%, down 7 days ago from 22.51%, and confirmed June 15th at almost 22%. Why is this happening? Well, it's not actually happening. Shorts are not actually covering. What is probably happening is some shares out on loan are being returned because people are looking at AMC stock. They're like, yeah, we don't want to short this stock right now. It's looking too good. It's looking like it's primed to run. And, you know, we don't want to bet on the consumer going out and doing things for the second half of 2022. So you're probably seeing a lot of shares that are being returned that were out on loan, and Ortex is just calculating that as short interest is going down as well. When that is obviously not the case, we will know when short interest is actually coming down, and it is certainly not happening right now. On another note, the cost to borrow max is now at 41.45%. This is a sharp uptick from earlier in the day today, whereas the cost to borrow average coming down just a little bit, about 4 percentage points, sitting at 15.28%, and the cost to borrow minimum doing some weird things, showing negative 0.97%. We do have about 150,000 shares available with a cost bar rate of 14.76% for those 155,000 shares. So I think the data here is looking really, really good, and I think we're getting close to seeing something very exciting with AMC stock. Now, you can see the option activity is also very, very bullish for the day. 90% bullish. 3 orders totaling $325.5 thousand, positive order value of 90%. So I think this is looking good, and I don't think there's really anything you can point to and say, yeah, that is negative for AMC. Even the overall consumer trend right now is that people are going out and spending money on services. They're not going out and buying as many iPhones, AirPods. They're not going out and buying as many Xboxes or PlayStation 5s, but they are going out and going to movies. They are going on cruises. They are going out to travel, and AMC falls in that sector of the economy, and that is a sector that you do not want to bet against going into the second half of 2022. So there is that. And that's really just a golden nugget. Don't bet against any of your travel stocks right now. It's not the time to bet against those, in my personal opinion. Now, what we are seeing on the option activity for July 15th, about 458,000 calls that are out of the money, 29,000 calls that are currently in the money, and 87,000 puts that are in the money. So you're seeing a lot of option activity still for July 15th. Every single day, you're seeing more calls being added to the option chain. Unfortunately, more puts that are being added to the option chain as well. But this is going to ultimately help drive that buying pressure. If you've seen even 50% of the calls go into the money and 50% of the puts go out of the money, you would see over 25 million shares that would have to be bought by the market makers, and that would be a very, very bullish event. That would cause the stock probably to make its way into that $40 range, in my personal opinion, given where the volume is at, given the level of FOMO that would drive for AMC stock. So I think that is really, really good, and I think that's something to look forward to over the next couple of weeks. Now, for next week and the max pain, that is sitting at $13 per share for Friday. That is going to be July 8th. We do have a short week next week because we are not trading on Monday. The max pain for July 15th is sitting at $16 per share, so I think that does indicate as well AMC stock is likely to go crazy here in the next upcoming week. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys found value out of the video. Thank you guys for tuning in. If you guys want to come trade with me live in real time, link down below in the description, as well as get your free stock, link down below in the description for Webull, Moomoo, and Public. Thank you for watching, and I'll see you in the next one.